Go through this massive rally, which I think is the biggest news story of the entire economy. We got our market experts this evening. CNBC contributor Don Luskin of Trend Macro. CNBC contributor Jerry Boyer. We have Peter Schiff of Euro Pacific Capital and author of the little book of Bull Market Moves in Bear Markets. And Dougie Cass of Sea Breeze Partners Management. I am still calling this the Dougie Cass bottom. And I want to ask you, Dougie, is America turning the corner?
It's clear that we're seeing a light at the end of the economic tunnel. And surprisingly, as I said 6 weeks ago, it's the consumer that's taking us out. Real consumer spending was up 1% in the first quarter versus a 4% decline in the second half of last year. And non-auto retail sales are up 1.9% in the first quarter versus an 8.5% drop in the fourth quarter.
So, Dougie, let me just ask you, stay with you for a second before I bring in others who may have different points of view. How does one play this? You've had this explosive rally. Now folks are all waiting for the great correction to get back in. But I've seen this before. So have you. So have our other guests. Sometimes that big correction never comes. You got to jump in some point. How do you do it, Doug?
Yeah, I think we've hit a generational low that we won't see the S&P at 666 for the next couple of years at the least. And I think you stick with early cycle stocks like housing-related stocks and retail stocks, and stick with Kudlow.
Stick with Kudlow. That's very sweet. Now, we got a Ben Bernanke quote from a speech today that throws some cold water on this. I don't know whether that was his intent or not, but Mr. Bernanke is very concerned that the credit damage is going to be continuing and ongoing. There's a second issue with Paul Krugman, the New York Times columnist, and I'm being extremely fair and balanced on this point. Krugman thinks that the risk is there's a double-dip recession. There's his column, Green Shoots and Glimmers, but at the end of the thing, he reminds everybody that we did have a pop coming out of the Depression in 29 to 33, and that by, 36, 37, we went down again into another recession. So let me go to Don Luskin. Don, do you think that America is turning the corner? Do you think this is unambiguously good news?
Oh, gosh. No, it's of course not unambiguously good news. The good news about it is just 3 or 4 months ago, everybody thought, and there was just no argument against the proposition, that we were in a vicious cycle that was going to take the world economy right down to zero. There didn't seem to be any way out of the vicious cycle of reduced consumer spending, reduced employment, falling real estate prices, increasing defaults, and so on and so on. And now, here we are, actually looking like we're kind of stabilizing. You got to stabilize before you can turn around and turn up, so at least we're stabilizing. And the bears who said we were going straight to zero, they're going to at least have to admit that that was wrong. Now, it's true. We had some great bear market rallies during the Depression. We had 3 years of back-to-back double-digit positive real GDP growth in the Great Depression. And then, as Krugman points out, we had that horrible depression within the Depression in 37 and 38. And what Krugman doesn't say in that column is it was the New Deal policies of FDR, which look very much like the New Deal policies of Barack Obama, that caused that depression within the Depression.
Amen.
And so I worry, have we turned the corner only to get near another corner? Fine, we're stabilizing. That's a corner. But the other corner we've turned is the corner on the road to serfdom, because we're putting in place more government intervention in the economy, higher taxes, and we're going to pay the price for that.
Well, okay, let me go to Peter Schiff on that. Now, Peter, one of the issues with Krugman's argument or worry or whatever it is that the Federal Reserve tightened policies, and he's right, by the way, and that the government cut back on government spending. I think he's wrong on that. But I want to ask you, you're always worried about inflation, the value of the dollar. Fine. Is there any evidence in your judgment that the Fed is not going to keep the monetary spigot on? Because I think the Fed's monetary spigot is a key ingredient in this rally.
Well, it is, but it's a key ingredient in the problem. As usual, Krugman is right, but for the wrong reasons. We haven't turned any corners yet. Unfortunately, we're still headed in the same wrong direction. We're continuing to go deeper into debt. We're subsidizing bad behavior. We're bailing out companies that should fail. Government is growing like a cancer, and more importantly, as Don said, we're abandoning free market principles. As you know, Larry, the only path to prosperity is free market capitalism. Instead, we're goose-stepping down the road to serfdom.
Is this a 70s story, Peter? You can get these monetary booms in the short run. Then comes the inflation. And yes, we're looking straight in the eye at more command and control government with the EPA dictum today. We may be going towards cap and trade.
I think
Is this a 70s style story?
No, I think it's much worse. I think it's a combination of 70s and 30s. That's why I've been talking about an inflationary depression. That's what I think is coming.
All right, Jerry Boyer, let me put I think we have the Ben Bernanke sound. Do we have the sound? Let's play the Ben Bernanke sound, and then let you react to what Peter Schiff is saying. Hold on one second. Take a listen.
We have come almost full circle, with credit availability increasingly restricted for low and moderate income borrowers. And the damage from this turn in the credit cycle, in terms of lost wealth, lost homes, and blemished credit histories, is likely to be long-lasting.
All right, what I gather from that, Jerry, is that there is no end to the monetary pump priming, period. End of sentence. And I want to get your response. Both Don Luskin, who referred to Hayek's road to serfdom, a socialist command and control argument made by the great free market Austrian Nobel Prize winner. I think he made it in the 1940s. And you heard Peter Schiff talk about, I think, inflationary depression. Dougie Cass is more optimistic. I might add, at least in the short run, so am I. Where do you come out, Jerry? Is this long-lasting? Are we turning the corner? Are we ridding ourselves of the deflation, but only to move into inflation?
Well, I think Road to Serfdom was 1945, and terrific book. I think they actually put funding for that road in the stimulus bill, in the infrastructure bill. They're expanding
Except it goes nowhere.
It goes nowhere. Look, I'm going to put on my policy bifocals for a second. When I'm looking out at cap and trade, and when I'm looking out at tax hikes coming down the road, I'm very concerned about that policy direction. And I think Don and Peter are very wise to be concerned about that. But you look through the bottom of the bifocals, too, and you look at what's right in front of you. And what's right in front of us is an economic cycle. And we're in the part of the economic cycle that I think is the beginning of the recovery. So, look out on the long run. I share all of their concerns about the policy direction. It's awful. But that's not what seems to be driving things at this particular moment. What seems to be driving things at this particular moment is monetary policy, is getting the credit system functioning again, and all of the dominoes that fell because credit wasn't flowing now are starting to stand back up.
Dougie Cass, you're not near as critical of Obamanomics as some of these other gentlemen are, and I want to lob into this. Is it possible that, including myself, because I do not like the government running the banking system, I don't like the government running General Motors, I don't like the government guaranteeing lube jobs for their warranties on automobiles. On the other hand, maybe when you go back to last fall, Henry Paulson and Ben Bernanke, and now we've gone in through this winter and spring, maybe this is a better policy under these highly unique, worrisome, and scary circumstances. Where do you come out?
The responses from Jerry and Don, I think, are academic responses. We were on the doorstep of the Great Depression #2, and there was really no alternative at that time.
Sure there was.
What, do you think Obama's heading for a big tax policy? Do you think he's going to smother the economy with a cap and trade? We're going to debate this later with Reich and Moore, but I want you guys to take a whack at it. The stuff that's in front of us, do you think his national health care plan, Dougie, will require also another big tax hike? Where do you come out on these threats?
I think that there are several, and you just mentioned a few of them, non-traditional, non-conventional headwinds that we have as investors, limited experience and perspective to deal with. It's going to elevate volatility. It's going to make the road to higher ground more bumpy. But I think in the fullness of time, we'll go much higher. And I think those concerns expressed previously by the guests are concerns, perhaps fourth quarter, early 2010 concerns.
All right, but Don Luskin, in view of the rapid growth in money supply, the expansion of the Fed's balance sheet pouring liquidity, the normalized upward sloping yield curve, which is so great for banks, the improvement in all of the credit market indicators, I mean, every one. In fact, you know what I noticed today? Junk bonds had a big rally. Investment grade bonds had a big rally. Short-term rates are at rock bottom. Why not deal with this a day at a time, a week at a time? And to use Jerry's point, let's look right in front of us before we go down the road and conjure up all the worst-case scenarios. why can't we say that America is still fundamentally a free market economy? And guys like me believe in our democracy, believe in progress, believe in American economic progress, even though sometimes I'm highly disappointed in policies in Washington. Why not play it that way in a shorter-term sense, Don?
That's fine. That's a great way to play it. That's exactly what I've been saying every week on this show. The problem is, it's just kind of sad that you have to become a player instead of being an investor. Wouldn't it be nice if all that stuff we've been telling our 401k plan participants for the last 25 years about buy them and hold them and forget them and stocks so long term and the gospel of equities, wouldn't it be nice if that turned out to have actually been true? But no, all of a sudden we're talking the language of 12-step programs where we have to go through life one step at a time, one day at a time, and do all this, what amounts to day trader nation.
Well, I like
that's great. I understand.
If the Federal Reserve and the Treasury,
we all do. I never exhaled.
Don, if the Federal Reserve and Treasury Department hadn't gone all in, what would the outcome have been?
Who knows?
Well,
but
wait, excuse me. You're preaching to the choir. I don't expect you to have memorized everything I've ever said in public, but I absolutely agree with that. I don't think they should have done that. That's not the problem. I just don't want to see top marginal income taxation.
Peter Schiff, real fast. What if Bernanke is right, Peter? What
He's
if
never
he's
been
done
right.
Exactly right this time?
He's never been right. Why should he start being right now?
What are the bank rally telling us? What's the bank rally telling us?
Look, I think stocks are going up because people don't want cash. People are figuring out that cash is going to be trash, and they rather own something that's not cash. But look what's happening abroad. Look at the strength in the foreign markets versus our own.
Jerry Boyer, let me banks are up close to 90% from the bottom.
Look how much they dropped, though.
Jerry Boyer, that has got to be a positive sign. I don't care how you get there. Look at the market verdict. It was the market that pulled the plug on banks in 2008 and early 2009.
And now the market is giving the thumbs up.
That's
and you know what? And you know what? If you didn't have Fed nibbling around about nationalization and stress tests, they'd be up one whole heck of a lot more just based on the fundamentals.
All right,
Bernanke is the guy who helped us avoid a depression.
I think the guy
he's
may
leading us
wind up,
right into one.
The guy may wind up getting a lot more credit than probably even I ever give him. Years of investor class power comes with CNBC's 20th anniversary. We are back. Don Luskin, Jerry Boyer, Peter Schiff, and Dougie Cass. Just as a personal note, I was one of the first. I was an unpaid commentator back in 1989. We were over in Fort Lee, New Jersey. Over the years, I stayed part of the family, stepped out for a while to take some personal problems. This great network brought me back. I am forever grateful. And lo and behold, Jimmy Cramer and I are running a show after 9/11. And lo and behold, we've been running the Kudlow Report or Kudlow and Company since then. I just want to thank every single viewer as well as our wonderful guests for this. Let me put on the full screen some interesting statistics about the performance and behavior of the stock market over the past 20 years. Okay, first of all, shareholder wealth. It has moved up substantially from $3.3 trillion in 1989 to almost $15 trillion in April 2009. That's plus $11.6 trillion for shareholder wealth. When you look at the gains for the Wilshire 5000, it's up 250%. That's 6.5% at an annual rate. Now, the CPI is growing at 2.8% during that period. So in real terms, the gains are 3.6% at an annual rate. I think that's page 1. We'll shift over to page 2 with any luck at all. Now, part of this story is the democratization of the stock market, the growth of the great investor class, which I think is the most significant economic investment and political movement in this country. Back in 1989, according to the Federal Reserve, 32% of families owned shares. By 2007, the latest data, 51% owned shares. When you look at it for a number of households, 29 million owned shares back in 89, 59 million owned shares as of the end of 2007. And I think we have a picture of at least the Dow Jones, if not the Wilshire 5000, to put up on the screen. We'll see the lousy corrections in all the cycles, but still, it's been a good move over the longer term. There it is. That's that awful-looking correction at the tail end, but you're still way above where you were back in 1989. And if Dougie Cass and others are right, we're going to see that line move back up where it belongs. I want to go to you, Jerry Boyer, on this point. There's a lot here. There's the rise of the investor class, which I regard as the most potent force in the American economy. Make it the American political economy today. What is your thought?
Well, by the way, happy 20th to you and CNBC.
Thank you.
And thank you for bringing me in and including me in it as well.
You're very welcome.
My thought is that this is what I'm most optimistic about. You're right about democratization. You know, the democratization of politics occurs because there's a free flow of political information. And what we have now with financial media like CNBC is a free flow of financial information. That plus, you know, a lot of things happened with deregulation in the 70s and the 80s, and, you know, the fees for brokers came down, and we're now a majority shareholders. That's why I think, by the way, that the Peter Schiff scenario is not accurate. That's why I think we're not in the 1930s, because in the 1930s, most people didn't have a stake in the system. So they could beat up on Wall Street and vote over and over and over again for anti-growth policies. But we now have a feedback loop. Most citizens, and even more so, most voters have a stake in growth, in economic growth, and the feedback loop tells us that when Obama goes too far to the left, that brings forth the political forces that bring him back to the center.
You see, Peter Schiff, this is my basic fundamental optimism. I believe in progress. I believe in American progress. I believe in American democracy. In the past 10 years, the biggest voters in the elections, all of them, have been people that own shares. And I think they know that free market capitalism is a better system than statist, government-controlled socialism, or whatever we're going to call it, Peter. That is why, despite two awful corrections, and some really bad monetary policy, among other things, in the last decade, I am still an optimist.
Well, if you have a long enough time horizon, you can be an optimist, but there's a lot of pain between now and then. You know, the problem is a lot of these Americans who bought stocks got suckered into the market in the late 1990s. They overpaid for their stocks, and, you know, so they're sitting on big losses. A lot of people overpaid for real estate. So Americans are in debt. I think, you know, if anything, they're looking for inflation to bail them out. And I don't think the fact that the stock market has gone up, and I think we're overstating the gains because I think we're understating inflation, but I don't think it really shows the performance of the U.S. economy, because I think the fundamentals have deteriorated. If you look at our balance of payments, if you look at the debt that we're in, if you look at what's actually happened to American families and to our economy, I don't think the stock market tells the real story.
But, Don Luskin, I must say, besides my fundamental belief in American progress and prosperity and our democracy, if something goes wrong, voters vote out the bad guys in Washington. What about American entrepreneurship? What about American initiative? What about American economic freedom? Sometimes it suffers a little, sometimes it advances a little, but on the whole, Don, it has been a fabulous story. Am I to believe, in the depths of a bad downturn and a rough bear market, that all of that entrepreneurship and good common sense of American people working in business every day and now investing is going to go away? Do I really have to believe that?
No. I don't think anybody is saying that you should believe that. America has been a beacon to the world for over 200 years, precisely for all those reasons. But on the other hand, within the time frame that investors have to make decisions, years, decades, you go through periods when that freedom is given greater play and when it's given less play. And when it's given greater play, you have very good, prosperous, high growth, low inflation decades. And when it's given less play, you have lower growth, higher inflation, wealth-destroying decades. The 60s and the 70s were in some ways very good, in some ways very bad. The 80s and the 90s were fantastic. Now, we had all our freedoms in all four of those decades, but it was better in the 80s and the 90s than it was in the 60s and 70s. I think all I'm saying is that our next 10 years is probably more like the 70s than the 80s. And the 70s is okay, better than being in a gulag, but I'd rather have the 80s back.
Well, Dougie Cass, when you call this a once-in-a-generation market rebound and opportunity, what is your take? Is this a long-run view on your part?
No, I think that this is a generational bottom. I think, as I said, we're probably facing, in the next 3 to 5 years, a period of lumpy, uneven, inconsistent economic growth. I think one quarter looked like we're coming out of the recession. The next quarter looked like we're going back into a recession. It's going to be awfully hard to navigate, both from the standpoint of corporate managers who don't have pricing power and investment managers. I think it means, basically, to me, as a hedge fund manager, less of a buy and hold strategy, more of an opportunistic trading strategy.
Interesting. Let me go around the horn really, really quickly. Peter Schiff, next 20 years, are you a buyer or a seller?
It depends on what I'm buying. I mean, I don't want to own cash.
I'm talking about American stocks, quickly.
Some. I'm mainly buying foreign stocks.
All right, so that's a no. Jerry Boyer, next 20 years, you buying or selling American stocks?
American stocks, American bonds, American real estate, American small business, American private capital, buying America for the next 20 years.
Next 20 years, you buying or selling stocks?
Yeah, buying them, but Larry, I'm just going to hold them in cap weights in the world market portfolio.
All right, Dougie Cass, you get the last. You called this bottom. Buying or selling? Next 20 years, Dougie.
I'm in Jerry Boyer's camp. I usually am. You buy.
All right. Thank you, gentlemen. I appreciate it very much. My thanks to you for coming on our show and helping us, as you always do, on our 20th anniversary. Dougie Cass, Jerry Boyer, Peter Schiff, Don Luskin.